Okay, let's analyze what is the best type of business to choose. We all understand that the best type of business is when you can buy a lot and when you can sell a lot and very fast. But anyway, we need to choose. Let's start from choosing through few types what we know already. For example, estate business, some producing business, for example, I don't know, producing furniture, whatever, stock market and currency market. And let's analyze and compare them, so we're gonna find the best of them where we can get inside and how we can work on it. First of all, let's understand that the most important thing, if you want to buy and to sell a lot, it means that you need to buy at a small price and to sell at a bigger price. So as soon as you find the best way to put the highest price and at the same time to have customers for that, it means that's the best one of the best businesses. Not every of businesses is getting under this law. For example, if we take the medicine market or I don't know, even food, for example, bread, they're regulated by the government, so you cannot put the price as big as you want. For example, if you take furniture, car, an estate and so on, you can put the highest price you want. Just there is another thing, how much time and if you will sell it. So let's see. First of all, here, what is equilibrium price? Equilibrium price, it means that, for example, if I am asking for an estate, I took it for 500,000, now I want to sell it with 1 million. It means I'm not sure that I'll find somebody who will buy it. If somebody is giving for it 550, it means, and I agree with that, it is equilibrium price. If it is just a one building and there are a lot of customers, of course the price will go up. If there is a lot of buildings and no customers, of course price will go down. So where they meet, I mean, I want 600,000, somebody is offering 500,000. If we get agreed at 550, that's okay, that's the equilibrium price. It means that's the real market price, because we can say whatever price it is, but if nobody is agreed to sell it or and at the same time to buy it, it means there is no price. This is the first one. The next thing what is important, of course, is liquidity. What means liquidity? Actually is connected to the same thing what we just discussed, but it's a bit different. It's the possibility like to exchange the good, your business good, your business asset, by the way, to money. So if we take it as an and in very fast, for example, if with lowest probability of losing money. For example, if we take the estate, it costs 500. If I want to sell it by 550, it could take 1, 2, 3 months or even half a year. So it takes too much time. If we take kind of producing of furniture, it's much cheaper, and in this case we could like sell it faster if you want. If we take the stock market, as usually when we discuss about stock markets, we take in consideration like London Stock Exchange, New York Stock Exchange, and so on. I mean big markets. So in this case, the traded companies are big and popular too, so you'll find always a person who will buy your stocks. For example, Apple stocks, everybody could buy, you always can buy and always can sell stocks, shares of a certain company, or even their derivatives. It's different type of contracts, but anyway, it's kind of contracts that are always under sale, and always somebody is buying, always somebody is selling it. That's okay. So the lowest liquidity is on estate. Whatever business you would like, another one, you need the same thing, like to check. If you try to sell a Rolls Royce somebody in a certain country which is very poor, the liquidity is very low for that car, you cannot sell it, nobody will buy it. So we need a product which we can sell, we can buy always, and we can sell always. As high as possibility we have this with a real price, I mean. Not if we take an estate and it costs 500,000, I want to sell it by 50,000, of course I'll find very fast. I mean for real price, which is real on the market. So in this case, of course, the money is the closest and the highest liquidity they have, because this is already money. You change money to money. Next thing what is important, the capital, the turnover and the profit. everybody understands, I suppose, that turnover as big as the turnover, it means like I buy one car and sell it, or if I do it every 10 minutes, I mean it's going very fast. Of course it will be bigger profit, but it's not always like this. Sometimes the turnover is big, but a lot of cost of producing is inside, cost of price, so finally you get a small profit. That's bad. If the profit is big but the turnover is small, for example, you buy a car by 10,000, but you found some guy who I don't know, and sell it by 50,000. It could be good, a profitable, small turnover, but it's unstable. For sure, it will not continue always. So in that case, if we take a profit as usually under 2% per month, this is a common thing. But if we take more than 5% per month, that's the best way. If you find the possibility where it goes like this, that's good. So if we analyze the estate, of course it's it's lower, the capital, the turnover. Turnover is big, but profit is not so big, considering the inflation and so on. And if we take, for example, the movement of currency market, it is the highest level at now moment. I mean, it really, if you check the euro, it is going under $1, and it's very fast. The day movement, it's around 200 pips. We'll get to understand this. Okay, it's a lot finally. Another thing, what is more important also, the next thing, what is important is the possibility of investment. What's the idea? For example, if I invest 1 million in a market, I don't know, we need to consider production capacity, which need to always also to grow, and we need to understand how much we will sell after. There is a bottleneck, if you understand what I mean, inside. So it's, even if you invest how much you want in a certain business, it doesn't mean that it will grow the same, like in average the same percentage. It depends on how big is the local market where you sell and so on, a lot of things inside. If you have a factory and you want to reinvest, I don't know, a factory costs, for example, 1 million, you want to invest 100,000 more, it will not bring you, if it brings you, for example, 10% a month, but it's not real. But for example, it doesn't mean that 100,000 you have more, you'll invest and it will bring 10% from this, then 102. As usually you will need the second factory, because it means new people, new market where you want to sell it, and a lot of things inside. So there are a lot of neck bottles. That's why you cannot do it. If we analyze the stock market, you don't have so much money anyway to get bigger than you are. So it's okay for you. The currency market the same, it's a good one. Next thing, what is important to understand, it's the knowledge and our resources. For example, as big as the business, it has inside a lot of processes that need to be arranged and controlled. Of course, it takes a lot of time and a lot of knowledge, and finally a lot of money to cover this. And that means that not every business is very easy. Even a state, you need a lot of money to start. Or producing business, the same, you need a lot of money, because a factory costs really a lot of money. At the same time, we need to understand that there is threshold for entering the business. For example, you can enter, for getting in a state you need certain money. You cannot get in a state with 1,000 pounds, for example. The same thing, you cannot open whatever. For example, you cannot open a shop of selling furniture. With even furniture, you cannot selling shop with 1,000 pounds, but you can buy some stocks for 1,000 pounds. It means that the threshold is much lower. That's the idea. There are three things we need to be considered. We need the threshold to understand before opening the business, starting the direction, so that we have enough money to get inside. At the same time, we need to understand the threshold getting out of the business, because we get in the business and at a moment we could get out. We need to understand how we will get out. If I get, even for example, I have a certain amount of money, what it be, whatever, $100 million to open a certain factory, and if it doesn't go because of war or something else, I need to get out of the business. How much money I can get out from this kind of business? Of course, there is a big risk. I could get out with half in best way, because everything, even you take a shop, you buy a computer for that shop, after 1 week it costs different price if you want to close it. The rent, the payments for seller, the workers, and so on. There are a lot of wasted money, so you cannot just stop. In trading business, I mean financial market trading, it is really very easy. You can stop whenever you want, because the business is in your pocket, in your is connected. I mean, it's a system between the banks, and your money is in the bank. You just exchange them to other monies. For example, if we discuss about currency market, but if we talk about stock markets, anyway, it's through the certain broker, and you can stop the deal whenever you want, and you can get all the business, because nobody press you to pay the rent and so on. You pay the rent and everything when you open the deal. It's just inside of the deal, and when you close the deal is stopped. So you may even, you don't have so many risks, I mean, of getting inside the business and outside. At the same time, you can add always a certain percent. For example, you have a profit around 10%. After a month, you started with 100,000. You made 10,000. You can put them into the business too, and you will get 10% from those 10,000 too, not just from the 100,000. Connection to geolocation. This is the most important thing now, because of the wars. What happens, whatever business where it would be, it is very connected, and it is a lot connected, for example, to Russia, to Russian gas, and so on. If you are close to this, you might even close your business. If your business need to a lot more gas and things like that, I mean, it's like depending on other countries or on a certain location, it is anyway a bit of high risk it has to develop. But if this business is online, just the internet, and you can be wherever in the world you want, you don't care. So in this case, it's less risky, of course, if you understand how it works. Another thing important is manipulation. Manipulation, it means when there is a big guy in the market who change the price as he wishes. So for this, if you have 1/3 part of the market, you own 1/3 part. In that case, you might change the price as you want. Yeah, we could take a simple example. For example, there are 100 cars in the market, the same type cars, and they cost every car costs around 50,000. And if somebody owns 30 cars, he could put the price lower, for example 40,000 or 30,000, or even bigger, 70,000. But it usually he could put it smaller. In this case, the small traders could bankrupt, and in this case he get all the market. I mean, he could change the price how he want, because he is of course it is illegal, but on small markets nobody is checking this. If you take big markets and stock markets, it's first of all, it's much more difficult to make it, and the second, there is always regulations and commission who is checking all these things, like, or even cartel agreements when somebody want to change the price. So it's forbidden. Of course, nobody can do this so simple, and nobody even see you, because you're too small trader, somebody to move the price against you. But on a certain small market, it could be. This thing need to be understood. What's next? Next, what is important also, as much as you want to work, the working hours. This is the important thing to understand. Because if, for example, a factory could work like 24 hours a day, stock market doesn't work 24 hours a day. Estate market doesn't work 24 hours a day, because you need a lot of dogs to make, and it doesn't work night time. But currency market, in this case, really it's working 24 hours a day, just excepting weekends. So in this case, factory everybody understand, but if you can work more, first of all, you are flexible. You may work daytime or nighttime, or your traders the same. If you have some traders who work for you the same, they could work daytime or nighttime, it doesn't matter. And at the same time, if you want, you may stop always, like getting some rest or things like that. Nobody presses you, and you don't waste kind of rent time and so on, or customers time. That's why it's everything is okay in this type of market. However, there are certain session when the market's opening. You understand, but every minute, somewhere, even when here is night time, somewhere is daytime. For example, in Japan is daytime. In that case, some banks are working there. That's why the currency market always works. So let's, in this case, like make some totals and check. Free pricing, supply and demand is for all of businesses. Let's check about liquidity level. Okay, on industrial business is medium, on real estate is low, of course, and financial market is plus. Entrance exit level on industrial business is high, quite high. Real estate is kind of low because you can use even some loans or whatever. Financial market is much lower. I mean, you can enter with very small deposit, whatever it is. You can even take 10 pounds and go and get exchange them to dollars and then exchange them back. You already could make some, okay, there are a few cents, but anyway, you could make, you get inside the business. But if you use estate, you cannot get there with 10 pounds. Of course, 10 pounds is not a serious amount, but anyway, I mean, there is kind of no entrance level in some businesses, and there is a certain entrance level in another business. Managing possibilities, okay, in industrial average is kind of medium or low. It depends on what. If it's a factory, it's a one thing. It's managing of a shop is a different thing. If you take real estate, managing possibilities could be different too. I mean, it's anyway a bit difficult. For the financial market is the highest managing possibilities. I mean, with few buttons you can check everything what happens, and you can stop every deal or open a deal. Geolocation, yes, this is the most important thing. And on real estate it cannot be. In industrial business the same. It can be on financial markets for sure. Manipulation possibilities, so we can check it. Industrial average is high, and real estate is high, and in low is very low in financial markets. Working hours, okay, everybody understand how it is. So finally you understand why you can use financial markets. Next we will discuss, by the way, about how the prices are made and how this all works.